Hi, you're listening to Stefan Livera podcast. For episode 230, we're talking about Lightning. And is it the future of Bitcoin transactions, or will there be some other layers and technology used instead? Udi, Wertheimer, and Eric will join me to discuss. This show brought to you by swanbitcoin.com, the best place to auto-stack your Bitcoin in the US with incredibly easy setup and low fees. Swan recently announced availability in New York, so they are now available in all 50 US states. They've got a range of new features too, like XPub support by Gigi, so you might want to use that feature with a hardware wallet of yours and automatically withdraw to a new address each time. Now, Swan's service is built around regular stacking, but if you want to wire money in for a special smash buy, support is coming for this very soon also. They're Bitcoin only, they're focused on teaching people to self-custody, so you should send all your new coiner friends there. This is a company focused on helping customers stack sats safely and easily. Go to swanbitcoin.com/New York to sign up. Unchained Capital is building Bitcoin-native financial services on a foundation of multi-signature. Their multi-sig vaults are designed for ultra-secure long-term storage and have no setup or storage fees if you build them on your own. If you want the white glove treatment though, their team will teach you all about multi-signature, ship you 2 hardware wallets, answer all your questions, and then deposit $1,000 of Bitcoin in your vault through their concierge service. You can buy Bitcoin through their OTC desk for purchases $50,000 or higher into your new vault, which is great for self-directed Bitcoin retirement accounts and for companies moving Bitcoin to Treasury. Their advanced business accounts, OTC desk, and concierge service can also help move your corporate treasury to Bitcoin, where your team controls the private keys. Check them out and enter code LIVERA when ordering a concierge onboarding service to get $50 off. Go to unchained-capital.com for more. And finally, Nox is a Bitcoin custodian dedicated to ensuring their insurance protection covers the full value of their customers' assets. For example, suppose a fiduciary wants to hold $250 million of Bitcoin with Nox. Nox will seek to obtain $250 million of insurance dedicated exclusively to that account and adjustable to volatility. No fractional coverage or narrow scope. Insurance for what it's worth. A tool to transfer risk. If you are a Bitcoin company, investment fund, trust, or family office, check out Nox for your insured custody. The website is noxcustody.com. Udi and Eric, welcome to the show.
Hey. Thank you.
So guys, we've got this little discussion, debate, whatever we want to call it. I think it's going to be a bit more of an informal discussion. I think it might be best if we actually let Eric set the context. Why is this little debate happening?
Yeah, so it all started with I wrote a blog post. It's called Eric's November Thoughts, where I'm extremely bullish on Bitcoin, and it took. I mean, in that blog post, I go through all the catalysts that we've had recently that's driving up the price, and how for the first time when people say, this time it really is different. I don't feel like that's a joke in any way. I really do feel like we are at the point in time now where Bitcoin has entered the world stage in a much more confident way, and also in a way that feels like it's not going to go back from here. Like, once you get the level of endorsements and acknowledgments from the mainstream industry, and I'm talking about investors such as Paul Tudor Jones, Bill Miller, Stanley Druckenmiller. Once we reach that point, it's going to be extremely hard to put the Bitcoin genie back in the bottle. But it took me a couple of days after writing that post, and I just woke up one morning when I had this holy shit type of moment where I realized that all these dreams that we've been having in Bitcoin for such a long time, and I've been in the Bitcoin industry for 8 years now, and I just got extremely excited because the store of value proposition of Bitcoin is getting cemented in a way where we see that Bitcoin is becoming something that every hedge fund in the world is currently looking at. I mean, I just, previous to this call, I was just on a call with a major hedge fund that were seriously looking into Bitcoin, and I met them a couple of years ago, and the type of discussion that we're having about Bitcoin is no longer, how does the technology work? Is this something used by criminals? Is it a tulip bulb? It's just like, how do we get exposure in the best possible way? And is the liquidity sufficient for us to enter this asset? So I just got extremely excited about this. And once I sort of fully took it in, the full effects of what's going to happen once Bitcoin becomes established as this type of asset class, then the next, I can sort of leap forward from that and understand that, if Bitcoin is going to succeed as a store value that is going to be on par with gold, then the natural evolution of that thought process is that, Bitcoin is an internet-based asset. Once you have it as something that people store their value in, the next step, which is for Bitcoin to start to transition into a medium of exchange, is very natural. I mean, once you use it to store your value, then why wouldn't you just accept payments in that same asset directly if the currency is specifically built for being transferred easily across the world? And that, as soon as then these sort of hints of hyper Bitcoinization really start to feel real. And it's in that moment when I think about that, hyper Bitcoinization is not a weird dream. It's just a natural progression of Bitcoin succeeding as a store value asset, that these negative thoughts come to me. And these negative thoughts are that we haven't really solved how we are going to conduct this medium of exchange use case. I wrote in the chat, I have a chat with Udi and a couple of other guys where I said, like, oh my God, things are just so bullish for Bitcoin right now. But it just sucks that Lightning isn't where we hope it would be. So Udi joined that conversation, and we started talking about Lightning and my issues with Lightning. I can go through them, like the weaknesses and the challenges and the reasons why I'm not as optimistic and bullish about Lightning as I mean. And don't get me wrong, I was, when Lightning was new with my company, we were one of the 500 first Lightning nodes. I tried to contribute to the Lightning discussion, and I am, like, in my heart, a Lightning bull, but I just don't see that the technical challenges with the protocol, make it such that it is going to be the ideal transfer mechanism for the masses. So Udi came into this conversation, and, well, maybe it's best for you, Udi, to go into this yourself. But what I took away from it was that Udi basically envisions a future where Lightning is going to be conducted custodially. And that, like, when I start to think about that, that's when, I start to get bearish on it for all, like, I start to get bearish on Bitcoin. And I want to think about, like, how are we actually going to conduct Bitcoin transactions in the future? So yeah, maybe it would be good.
Yeah, let's hear a little bit from Udi.
Right. So I wouldn't say necessarily that I think that Lightning would be used custodially, but here are my thoughts on this. So first of all, I think I need to be nicer to Eric, because if he's been in Bitcoin for 8 years, then he can probably buy me out. So Eric, you're my best friend from now on. This is the first thing. Second thing is, of course I agree with the bullish side of his analysis. I am not convinced that we necessarily need a payment system at all for Bitcoin to succeed. I think it can be great. It would be awesome to have it, but I'm not sure we need it. It seems like so far, and I don't know all of the Bitcoiners in the world, but it seems like so far Bitcoiners are not necessarily very big spenders. I think, of course, some Bitcoiners are, but I think if you I don't have any data on this, but it looks like, Bitcoiners tend to think about, saving. They tend to think about having equity in things and not necessarily consuming. It's a kind of a big thing in the Bitcoin story. And I think that's why, a payment system right now just doesn't seem to have a lot of demand in the Bitcoin community. I mean, we all love Lightning. I think so. I mean, I get excited by it. I've been excited by it for years. I've been, building it on it in various ways from 2016, and I think it's great as a technology. It's innovative and it's exciting, but I'm not sure there's demand for it right now, and I'm not sure there's going to be. Maybe, I don't know. I honestly don't know. So it looks like Bitcoiners are, some of them at least, probably a bigger percentage of Bitcoiners is kind of frugal when compared to just the general population. I think that a lot of people who spent Bitcoin in the past, probably most of them, tend to regret it nowadays. So it's the usual story. You open up your wallet or whatever, and you look at some transaction when you bought something 3 years ago, and you just and you're just devastated. So usually Bitcoiners are just not, they regret spending money. So they're really not looking for a payment system right now. Some people are. There are some use cases. I'm not saying they are. Definitely people are using Lightning. I think it looks like the usage is growing, but it's still. I think the demand is pretty small, and even if there's going to be demand for a payment system at some point, and it's possible, I do think that it's most likely that people will choose a custodial system for it, regardless of the state of Lightning. So, I can imagine people who, maybe Bitcoin becomes this standard, store value, and everyone holds a few sats, and then people will choose to maybe use PayPal to transfer Bitcoins, because maybe the merchant wants to accept Bitcoins as an asset. They don't care about the custody. They just don't care about it, just like they don't care about custody right now. But maybe they just value the Bitcoin asset and they want to receive it as payment. So PayPal is going to allow people to pay custodially with Bitcoin, or it can be a currency that you can pay with your Visa card or your MasterCard or whatever. So I'm not necessarily saying that it's great. I mean, I obviously I see the benefit of using systems that let you be in self custody, but I'm not sure that the people are going to care about that. But let's say I don't know what the future holds. So let's say there is demand in the future for the centralized payment system, for a self custody system that allows for payments. In that case, I think Lightning will get there. I think that a big part of why Lightning is kind of developing in a somewhat slow way. Although if you're really involved in the development in Lightning, I don't think you will say that it's slow, because it's so fast that it's really hard to keep up to date with the changes. But the growth isn't very fast, and so you could say that it's not just it's not growing really fast. I guess you could say that, and I think a lot of the reason for that is just that the demand isn't there right now. And if it will be there, then I think that you'll see the Lightning products improve very quickly, much quickly than they did now. Now, in the last year, just in the last 12 months, I think that the user experience in Lightning, in the new wallets like Phoenix and Breeze, and some of those like kind of next generation Lightning wallets, I think they're amazing. They're really easy to use. They're really great. They solved a lot of the problems, and there's already this roadmap of how other problems are going to be solved.
Udi, if I had to summarize your point there, it's essentially that, essentially a lot of Bitcoiners are mostly hodling. And so from your point of view, if they're only spending a small amount or not spending at all, well, it's maybe it's not a huge deal that they're using some of these not perfectly self-sovereign, custodial Lightning sort of things. But I guess I think we should go back to Eric here and get Eric's view on exactly what are the problems that he sees with Lightning transactions, today, and why Eric believes that they wouldn't be overcome in future.
Yeah, so first, I would just like to address this point where Udi talks about there not being demand for Lightning transactions. And I mean, it feels to me like you're already now in this conversation having a way too restricted view of the future that I want us to talk about in this conversation. So the reason that I want to have this conversation is to explore what happens after Bitcoin succeeds as a store value asset. And I think that I mean, the reason that I am leapfrogging to this later stage of Bitcoin's lifeline is because I feel like the hurdles in order for Bitcoin to achieve a store value status have already been passed. It's just a matter of time now before the meme spreads and it gets into sufficient amount of people's portfolios. That's why, and the situation we're going to be in at that point is going to be completely different from now. I believe that once Bitcoin has grown to such a stage where it is something that most people have experience with and are comfortable using as a store value, the natural progression of that is that we're going to start to want to use it also for transactions. And the store value and the medium of exchange use cases, those two have synergic effects between each other that allow Bitcoin to transition from so much more than it would have just been if it was just an asset that we just stored our value in. It's essentially like if Bitcoin just becomes a store value asset, then it's limited as a gold or alternative, and that's an asset class in the range of $10 trillion. If Bitcoin becomes what I want Bitcoin to become, which is universal hard money, and I've talked a bit to you about this, universal hard money. It's basically a money that we use that is as scarce or scarcer than gold. Once you start using that asset that is scarce, that is finite, that is appreciating in value over time, as also the form of money, then it's going to spread even more as a store of value, because it's going to be like the lazy thing to do. You receive some payment from somebody and you just keep it there. That's how you get Bitcoin to transition from being worth $10 trillion to $200 trillion. But in order for us to reach that point where Bitcoin can become universal hard money, not just a store value asset, we need to have a system to transfer Bitcoin with that preserves, well, at least has the possibility to preserve the properties of Bitcoin that makes it useful and interesting in the first place. So actually, I would like to kick back the question to you, Udi, because you were the one. I think that you are better at steel manning. Why you think that Lightning will be used custodially? I mean, I can to answer your questions, Stefan. I can answer why I think that there is a strong likelihood that Lightning will not be suitable for this role, and I think it's because I'm not sure what type of transactions Lightning is good for. Is it good for small payments? Because I don't really think that it's good for small payments, because if your counterparty signs an invalid state and puts it on the main chain, you have to make a justice transaction. You have to, and then if the fees on the main chain are very high, it's not going to be worthwhile to try to rescue a smaller amount than what the fees are on the main chain. So I think that, like, inherently, you cannot expect Lightning to work well for the end user for small payments unless it's using a custodial channel which can that can do this for you. So I really do. And I don't see that it's good either for large payments, because inherently Lightning is made up out of channels. And if you want to route a large payment throughout a large network that is consisting of multiple tubes, if just one of those tubes are too small, your transaction won't make it to the endpoint. And it's also difficult for large payments if you are let's say I'm selling tickets or something over Lightning, and I need to, like, let's say I'm selling tickets for a total of $10,000. I need to have $10,000 of liquidity pointed towards me in order to be able to aggregate all those payments. And then you have an issue like, who's going to direct that liquidity to you? Are you going to rent that liquidity? I mean, that's pricey. So I don't know what type of payments are Lightning good for. They're not. This doesn't seem to me that it's very good for small payments. It doesn't seem to me that it's very good for large payments, and I'm not even certain that for the payments in between that Lightning could potentially be good for. I'm not even sure that it's going to be good for that, because we haven't really understood yet, or we haven't really addressed, like, what are the fees going to be if you are using liquidity that isn't your own. How much are you going to pay for that liquidity?
Okay, so I guess before I guess there's probably a few answers. I guess we would just want to clarify from Eric before we go back to Udi here. So I think with the small payments there, I mean, you mentioned there, okay, you might need to do what's called a penalty close or a justice transaction in like the Lightning Labs terminology. But my understanding is that kind of thing doesn't really happen that often. It hasn't been a big deal right now. So I guess my question would just be, why do you think that's going to become such a huge thing? And also around large payments, I mean, I'm sure you're aware, but I guess the typical answer would be, hey, look, a lot of people now have MPP and routes retrying, meaning they can try the route in different ways. So I guess, Eric, do you have any kind of counter arguments on that? Or is it just you think in practice it's going to be a problem still?
I mean, your counterparty, if he can close the channel in a way that benefits him, like, he earns money by doing it, and it's too costly for you to make a justice transaction and prevent that behavior. I don't see. I mean, I think that the reason why this isn't happening so much is because right now Lightning isn't consisting of that many adversarial actors. But that's going to become a problem once the masses start using this. I mean, I may be wrong about this. I'm very happy to. I mean, the reason we're having this call, it's not like I don't want to be this person that has this negative agenda about Lightning. I want us to sort of reach a mutual conclusion about what the future could look like. So if I'm wrong in thinking that way, that Lightning isn't perfectly suited for small transactions, and I'm very happy to learn, and then we can sort of identify what Lightning is good for and what it isn't.
Yeah. Okay. Udi, did you want to respond to anything there?
Yeah. So, Eric, specifically to your kind of pain points with Lightning, I think the issue with, first of all, with small payments. So the way I think about Lightning is that like the Bitcoin base layer protocol is just not very good for payments. It's not just for the scaling reasons. It's a big reason, but it's not the only one. Just keeping track of UTXOs is weird. It has weird privacy concerns that are very counterintuitive for normal people. And I don't know, it's just a mess. The way that you're going to send, just sending money to an address is pretty messy. You really want to have invoices that specify amount, and you want someone to kind of confirm that this is the amount that they asked for. And it's great if it's part of the protocol. So Lightning kind of gives you a lot of nice features that are just missing. They could be done on base layer Bitcoin, but they make more sense on second layer. And then what you end up with is a balance, which is something you don't really have on base layer Bitcoin, but you end up with, because you have UTXOs there. But on Lightning, you end up with a balance, and you change this balance over time. And if something goes wrong on the main layer, then you can do this justice transaction process and get something that is approximately that balance back to you. Now, it's possible, it's likely that if you're going to use Lightning to make transactions every day, then it's possible that, like, the last transaction that you make, you might lose its value because the fee might be bigger, right? So maybe you made a $5 payment in the last day before someone tried to cheat you, and you caught them, and you had to pay the mining fee, and those $5 are now lost. But you also had a history of hundreds of days before that are accounted for. So, you pay the mining fee once. The whole point is that you kind of you get to use that mining fee for many transactions and not just one. So I think it's still valid for small payments. I think it's still okay. If you're making one small payment, then it's obviously not useful. But if you're going to make a lot of them, I think it's fine. Stefan brought up AMP, which should alleviate the issue of what happens if on the way you have just channels that are too small. I'm saying alleviate. Alleviate is a big word, but it should help mitigate it. Should make it less common. And similarly with liquidity. So if you're going to look at again those newer consumer wallets like Breeze and Phoenix, like the experience there is amazing. You don't even know, they don't tell you about the channels if you don't really look into it, and they just make sure that you have a channel. And when you get a payment, they're going to open a channel for you if you don't have one, and it's seamless. Like you're not even told about it. It really works great. Like if you're going to try,
is that customer acquisition strategy, or is it really something that is scalable? Like, can they really do that for the long term for hundreds of thousands of users?
Well, they might need to charge for it in some way, for sure. It might at some point this service might be charged, something that they charge for, or they might have some other way to monetize. But yeah, for sure they can't do it for free. It's costly, but that's fine. When you're connecting to the internet, your ISP has some expenses. That's fine, but they're able to do it because they have a monetization strategy. I don't see anything wrong with that. The important thing is that anyone can be an ISP. Now, that's not necessarily true in the internet world. It's some places you're going to need a license for that. I guess that depends on the jurisdiction. The question is, if you want to be, a Lightning service provider that's going to open channels to its users, what are the challenges to becoming one of those? And I think it's a pretty low bar. I think that probably anyone could be one. As long as you have a way to attract users or customers, I think you can do that, because you just need to open channels. Basically, you don't need to ask for anyone's permission. And if you're in a jurisdiction that requires you to ask permission, then you can go somewhere else. That's the beauty of Bitcoin, right? So I think that it's pretty good. It's not this magic bullet that just works. It's not the switch that you just turn on and everything works. But I think that it's pretty good. It's already pretty good. And things like Lightning Labs just introduced the Lightning Pool tool. I think it was a couple of weeks ago. Obviously, it's very early right now. I would say that it's a kind of a testing thing right now, but at least that's how I would define it. But it's obviously going to grow. This specific product or something like it is obviously going to grow, and people are going to use it, and eventually they're going to be good tools to use it. And I guess this goes back to my main point. I think if you want to use something like Lightning Pool right now, you're probably going to need to be an expert. But if there's going to be an actual real demand for merchants to have significant incoming liquidity, then people are going to supply tools to do it, because there's going to be money in doing it, so someone's going to do it. It's just right now, you're going to see a lot of developers kind of arguing about what's the best technical way to do stuff, just because there's not a ton of demand right now. And when there's going to be demand, there's going to be urgency, then things are going to start falling into place quicker.
Well, it sounds to me like you're saying that many of these pain points with liquidity and having reliable counterparties to have your channels with are going to be alleviated by peering with these Lightning service providers, these trusted, these well-defined, good actors that help you get onboarded to the Lightning network. But
I wouldn't say they're very trusted.
Well,
they have a role, but I wouldn't say they're trusted. Like, what are you trusting them with?
Well, what you're creating is essentially a dependence on specific actors in the Lightning network that you will need to be connected to in order to have a good experience while using the network. While in the same sentence that you said all that, well, in the same earlier in that sentence, you were talking about how Bitcoin wasn't really good as a transaction layer, but Lightning was good because it had all these privacy feature. Now, I want to ask, what level of privacy do you think you're going to get on Lightning if you are if your gateway to Lightning are these established Lightning service providers. Don't you think that the amounts can be linked if you pay through a Lightning service provider? If all the payments goes through the specific gateways in the system, and you pay specific amounts, and they end up at endpoints, those transactions can be linked. I mean, I don't think that Lightning has. I think that Lightning has even more poorly understood privacy features than. I mean, we know that Bitcoin base layer private isn't good, but at least we know how bad it is. I think Lightning is worse in a way because people expect the privacy to be good, when in reality, I can come to think of so many different attacks on Lightning from a privacy perspective. From just uh, figuring out how much is in a channel. I mean, you can see all the channels that are being. There's too much metadata that is being leaked when you open Lightning channels. You can also figure out like how large is in someone's Lightning channel, and you can try to figure out what their node is. And since everything needs to be online all the time, that comes with a whole other category. I mean, you can't even receive a payment in Lightning without being online and and then you're gossiping data about who you are in the network. I mean, yes, those are things that you can get around, but it's like you're creating this larger ship with a much larger attack surface to attack from a privacy perspective. So I don't think that the Lightning is a good solution to privacy at all. I think it's like, obviously it's not worse than Bitcoin, but it's not.
I think it's very hard to tell. I think it's really hard to tell right now if it's a great solution or not, because there's not enough usage yet to really analyze it seriously. B, there hasn't been a ton of research into it. There's been some, but not a ton of research into it. I think it's very early to tell. Even though it's early to tell, I think we can all agree that it's better than just Bitcoin is, just base layer Bitcoin is. But
Precisely.
yeah, it's hard to tell. I think, generally when it comes to privacy, I am kind of pessimistic on the possibility of the existence of some tool that you just press the button and it makes you private. I think you're probably going to need to be, whatever you choose to use, you're probably going to need to be kind of involved and at least have some idea of what's going on if you're hoping to achieve privacy. So with Lightning, you're going to need to use Tor probably for your node or your wallet or whatever it is, and you're going to need to use it intelligently too. There's a bunch of stuff you're going to need to do, and I think the nice thing though is that Lightning creates the opportunity for you to do it. So in Bitcoin, if you're going to pay someone to a standard address, it's going to be very hard for you to do it privately. It's just difficult. With Lightning, if you know what you're doing, you have an opportunity to tap into this liquidity pool that is potentially kind of dark. You can make a payment through, you can make sure that you're not connecting to a very popular Lightning node, that you connected to a smaller one, and to have a route that is not, doesn't stand out too much, and that the participants in that route cannot grasp all of the information. You have that option and you're connected to the same network. So you're still, you can still be accessible. So what I'm trying to say is you can choose, you can pick and choose. If you want to be that consumer that wants the simplest solution, then you can go with one of those simplest solutions, maybe sacrifice some privacy. And we know, even those two wallets, I remember, I'm not sure about Breeze, but I think that Phoenix made some statements about how they know that privacy isn't great right now with Phoenix, and they're going to improve it in a few ways, but it's not amazing right now. But the nice thing is you can pay someone who's using Phoenix with your completely involved custom setup that you made on your own. So you can have your own setup and you get to connect to the same network and pay to someone who's using those simple consumer wallets. So I think that's where the real value is. Like, everyone's connected to the same network and the protocol allows for privacy. Of course, some people are not going to be private, maybe a lot of them, but the protocol allows for it. And if you're careful, you can participate while keeping your privacy. So I think that's the biggest benefit. Now, how it's going to look, like what the stats are going to be, how many, what's the percentage of actually private transactions going to be? It's very hard to tell right now. Really hard to tell. But I think that if someone wants to, they can. So I guess we'll know how many people want to.
Yeah, I think it's also it's a complicated thing to talk about, but it's probably fair to say that we shouldn't let the perfect be the enemy of the good, and the fact that we use Lightning enables dramatically more transactions for far less of a fee, even if there's still some risk of things like penalty close or justice transaction, or in this case, privacy leakage, which I think some of these things are openly admitted by some of the developers. And, if you look back at some of my earlier episodes with, say, Rusty Russell or Christian Decker, they'll talk about some of these things openly and say it's possible right now. If you have like a really well-connected big Lightning node, then yeah, you might have some ability to try to understand what's going on in terms of where likely the payment is coming from and things like that. But it's not. I think also if you talk to them, they'll say, well, there's other technologies coming and things like, hopefully once we get Taproot, then we'll have point time locking, and we'll have some of these more fancy technologies that will improve our privacy also. So it's kind of, I think also it's probably fair to say that if you're doing an on-chain payment and you're not using any kind of coin join and privacy techniques, that is on the chain forever. Whereas at least to surveil a Lightning transaction, it kind of takes a bit more than that, right? You have to actually have the node set up, and you have to like have routing, and it's not as easy to just simply surveil as compared to Bitcoin, right?
All right. So I want to take this conversation to the logical next step. And this is very difficult for me for how to bring this up. But
Sure.
From listening to the two of you and from having had this conversation for a long while now, it feels to me that there are quirks of the Lightning protocol that make it difficult to maintain your privacy and harm the user experience for normal users, that will either require users to be very sophisticated and know what they're doing when they're interacting with Lightning, or they will need to make trade-offs in terms of, maybe they'll accept completely custodial Lightning wallets in order to get their their channels perfectly balanced and to be immune to certain types of attacks. I think that these categories of solutions, like either having to be a sophisticated Lightning user, which is a hard thing to be, or being a completely custodial user, which I don't think is good either. I don't think that those two options that we have are the only options that we have for transacting Bitcoin in a trust minimized, scalable, and private way. So this is the whole reason. I mean, nowadays people, they don't think of me as as a proper Bitcoin anymore, because I've started to pay attention to things that's going on inside other protocols. So I'm gonna just go out and say it. If you have been following my Twitter, you have perhaps seen that I'm doing this experiment called the ZK Sync torch. Now, the reason that I'm doing that is that I believe that perhaps, if we zoom out a little bit and we think that Lightning is not the only solution, maybe the best way to transfer Bitcoin was after all, to do it on a sidechain. Because on a sidechain, you don't have these issues with channels. I mean, you can send your Bitcoins to whoever you want who has an address on a sidechain. There are no channels. There are no there are no online requirements. There are no liquidity requirements. You can transfer to whoever you want. But I mean, sidechains are the two sidechains that most people are aware of, which is the completely custodial, multi-sig based custodial, the federated custodial model that Liquid has is one. The other one is where instead of having a federation in a multi-sig be in custody of your Bitcoin, you have the miners being in custody of your Bitcoin, which is the drive chain option. I don't think that those two options are the best way to have a sidechain. I think that the TBTC, the trusted Bitcoin on Ethereum, which uses it uses an SPV proof. Like the Ethereum runs an SPV wallet basically, where it looks at Bitcoin blocks and is able to, based on an SPV proof coming from the Bitcoin chain. That's how it allows Bitcoin tokens to be minted. And how the funds are protected are that there are people who receive the real Bitcoin on the Bitcoin main chain, but those people that are holding the real Bitcoin, they are unable to steal those Bitcoins, because if they do, they will lose a bond of Ether. And it doesn't have to be Ether, it can be any asset on Ethereum. Right now it's Ether. They will lose that bond. So I think that sidechain model, where you tokenize Bitcoin on another chain using an SPV logic, and where the assets that are held on the main chain are being protected from being stolen because they are bonded. They are bonded by Ether on the other chain. I think that's a genuinely interesting sidechain solution, because you don't have the multi-sig, the federation, the liquid federation can't run away with the Bitcoins. The miners in derived chains, they can't run away with the Bitcoins. This is a better model to protect Bitcoins on a sidechain. And we have that on Ethereum now. And what we also have on Ethereum are other scaling technologies. And the most popular one right now are called rollups. And in a rollup, you can transfer around these TBTC tokens. That's what my ZK Zinc Torch experiment was about. You could transfer around these tokens in a rather not as scalable as Lightning, but rather scalable transaction system. You don't have any channels, so I can send these TBTC tokens to your address without you having set up a channel, without you having any inbound liquidity, without you being online. That's why I wanted to do the experiment, just to show people how easy it is to accept payments without having to deal with all these other complicated things that we in the Bitcoin world associate with layer twos. And we can also solve privacy in these layer twos, because we have a fantastic category of technology called zero-knowledge proofs. And zero-knowledge proofs can be made to anonymize. I mean, that's how Zcash does it, right? That's how they get perfect anonymity of both the sender, the recipient, and the amount. We can have that technology inside a rollup on Ethereum. And if you're saying that we have to either deal with this messy Lightning solution, or we have to do it custodially, like if those two aren't the ideal options, I mean, I'm not saying that the Rube Goldberg machine that I just mentioned, the sidechain peg on Ethereum and the rollup technology, I mean, that's also a complicated solution, of course. But is it any worse than the two other options that we have talked about here today?
Yes. So I'm sorry, Eric, but I think it's a ridiculous proposition that this is somehow, an easier solution. And there are a few reasons for that. One, first of all, I think that your torch thing experiment is cool. I think it's a cool idea. I think that Hodlonaut doing it with Lightning was cool. And I think that trying it out with other tech is also cool. That's great. But you have to, when you get those user experience that are pretty good, we have those on Lightning too. So as we just said, you can download Breeze or Phoenix and just start using it, and it just works. It works now. You don't need to mess with channels. You don't need to think about them. You don't need to do anything. It just works. Now you're going to say, but privacy, but this, but that. Okay. So look, you're going to use the tools that you used, right? You're going to use a web page that someone made. You don't know what's in the web page. You're going to connect it to some web extension that you don't know anything about. It's going to connect to some server, probably on AWS, that stops working with when Amazon is down. It has all of those pain points that Ethereum people will just say, well, because it's still in development, but it's always in development. So it's just, it's not better in any way. So in Phoenix and Breeze, they have their trade-offs that they chose to use in order to give you a better user experience. And in the same way, those experiments, and they are experiments, like something like ZK Sync isn't anywhere as advanced as Lightning is right now. It's an idea. It's not implemented anywhere to the same level that Lightning is, which is fine because it's newer. But anyways, they chose trade-offs too. And their trade-offs are, for example, you are not, you're going to trust that AWS doesn't go down or whatever server backend they're using, and so on and so on. And I'm not going to go through the entire way that it works. Similarly for TBTC, which is, an entirely different construct, which you have to believe in and trust. TBTC, you mentioned the ETH collateral. In order for the ETH collateral thing to work, you need to have some source of a BTC to ETH price, which is very hard to do in a decentralized way. I don't want to get into how TBTC does that, but I hope that it's obvious that it's at least a concern. And just today, as we're recording this, I think a compound user lost about $50 million. Not a lot, just 50 million. 50 and then 6 more zeros. So he lost $50 million because of a Oracle that was exploited, basically. Or I don't think it was a technical exploit. It was a monetary exploit or financial exploit. But the point is, they trusted an Oracle, which they probably shouldn't have trusted, and lost just $50 million. So those things happen. The thing. So when you're using something like TBTC, and when you're using something like perhaps those second layer networks on Ethereum, you kind of putting all of your eggs in the same basket. You have this all of those risks on top of each other, and which are very hard to evaluate. And you end up with something that, with Lightning, if something goes wrong in one channel, then that's it. That's what's lost, this one channel. With TBTC and with the ZK Sync stuff, if something goes wrong, then potentially everything is lost, everyone's money, which is why they're huge targets. And it's just, just saying that they're somehow, better or easier is just, I think it's absurd. I think there are cool things there. There are ideas that are interesting. I think that the notion that someone will choose to use that for Bitcoin payments, I find it absurd. I mean, it's so out there. I can see people use it for, they're going to use TBTC for loans, for lending, for whatever. To say they're going to use it for payments, I mean, maybe, of course, but I don't know what the future holds. But I think that it's really not easier than Lightning in any way. And I want to say one last thing about the whole trade-off issue. So there are always going to be trade-offs. I think that right now with merchants, let's take the most extreme Bitcoin merchants in existence. Okay, the ones that really care about self-custody. There aren't a lot of those, right? Most of the merchants that accept Bitcoin are just going to go to some payment service and have them handle everything and pay them with fiat in the end. That's a majority. But let's go to the most extreme of them, who are going to host their own like BTC Pay server, and they're going to have the BTC Pay server send the funds to a public, to a cold wallet that isn't even connected to the server itself. They're going to take all of those steps to set everything up. These people are still trusting the server. Those merchants are still trusting the server because most of them are not going to have the server at home, right? Because they need to, they want to serve customers and they want to make sure that they have a very good uptime. So they're probably going to host the BTC server on Amazon or whatever it is. And Amazon is not going to hold their keys, but Amazon is going to generate the addresses that customers are going to send money to. So if Amazon turns evil, they could just show you addresses that are actually going somewhere else. So you have to have the trust. Merchants will almost always have the trust with some service provider, just because they do the calculus and they're saying, okay, it's a business decision. I can host my own server, but it's going to be costly, or I can outsource it, and then I take some risk there. And I can take the 0.1% risk that a limited something bad happens in a limited way and affects a small amount of my sales, than hosting it myself, and then it goes down for 5% of the time and I lose more sales. So it's a very basic calculus there. So merchants are almost always going to trust some service provider in some way. So to say that they'll go through this, very convoluted system on Ethereum that has you trust all weird people just to avoid what? To avoid having a service provider? Merchants love service providers. They want someone to take care of it. They don't want to do it themselves.
Okay, so let me stop you there, because you said that this was a completely ridiculous notion. So I want to ask: is using a sidechain, like any side, like if we can just think of a random hypothetical sidechain, do you think using a sidechain to conduct Bitcoin transactions, is that absurd?
I think very often it is. Again, it depends on the use case. I don't know if you can come up with a good use case. Maybe I think that to do it for payments, it's kind of absurd, because it's so convoluted that I can't see it.
Okay, well, I don't think that using a sidechain to make Bitcoin payments is absurd. And I think if you look at most of Bitcoin history, where we were a couple of years ago, I mean, everybody wanted and envisioned that we would make Bitcoin transactions on sidechains. I mean, that was why Blockstream, the company, was founded on. So I think it's a niche opinion that you have, that sidechains would be sort of an absurd way to make transactions. And
I'm not trying to represent anyone. Okay. Those are my opinions.
Right. So, sure, but if it's possible for me to maintain that making Bitcoin transactions on a sidechain is not absurd, and I think that I'm not the only one that believes that, then if you have a sidechain and you're going to make Bitcoin transactions on it, wouldn't you want the most trust minimized pegging mechanism that you could have for it? Well, the construction that I've just explained, the TBTC mechanism, it is the most trust minimized.
I don't know what to tell you, Eric. I wouldn't use a sidechain for payments, so I really don't know what to tell you. I don't think that it's a good idea. And if you're gonna, if you can say maybe the TBTC construction is better, I honestly don't think so. But maybe it is. I'm not. I don't have the tools to judge that. But I really just wouldn't do it. I wouldn't use any sidechain. I wouldn't use Liquid for payments, right? I don't think that it's, okay, maybe I happen to have some Liquid Bitcoins and the person I'm paying happens to want Liquid Bitcoins, so maybe I'll send them. The same can be true for TBTC. Most likely it's not going to happen. Neither of them are probably going to happen. So I don't know what to tell you. I mean, I don't see that as a scenario that's likely.
Yeah, and I just want to add one point in here as well, guys. So, Eric, you're saying, okay, using TBTC on Ethereum might be more trust minimized, but ultimately, and I think to the point Udi was making earlier, anyone using that is also taking on platform risk of Ethereum. Whereas if we just stay in Bitcoin and Lightning, we understand that model more, and we're not taking on another whole platform worth of risk. What would you say in response to that?
Well, I think that Lightning, which is the option here, it also comes with a number of specific risks, and I don't agree that these risks are only isolated to specific channels. I think that Lightning as a protocol, I wish I had a list of examples of the different design-based attacks that are not only, it's not only griefing attacks that you can make, it's not only DDoS attacks, there are actual attacks that you can burn your counterparty's balance, and that attack is not isolated only to one channel. I mean, we could we could have bugs in Lightning code bases just in the same way that we have bugs in any code base. I don't think it's fair to say that this one solution has a platform specific risks that encompass all the transactions being made there, and that the solutions that you guys have described are somehow immune to that. I think at the end of the day, if you want high security, the only way we're going to get high security in open source protocols is to have something that is frequently used by everybody and that has a lot of eyes on it. And how do we get a lot of eyes on something? How do we get a lot of people investigating and testing out a single tool? Well, it needs to have a good fundamental user experience. Once you get the users using the thing because they like the properties, like let's say it has good privacy and easy ways to make payments that doesn't have all these complex ways to make them. Once you have that, you'll attract a large user base, and then that transactional layer is going to have the most eyes on it. So whatever the bugs that could be in there are, they'll get discovered in that protocol first. I think that the easiest way that you end up with having a buggy system is by building a solution which has hurdles to entry so that nobody is using the thing. People are barely looking at it because it's not a popular solution enough. So I think popularity in open source, that's the best way to attain a high degree of security.
The popularity of Bitcoin payment solutions on Ethereum is somewhere between 0 to 1 users. It's because maybe Eric, you're using it, but that's it. No one is using.
Yeah, but it's always going to be the case with cutting edge technology that nobody's using it in the start. Like I'm looking at the fundamental properties of these technologies, and I'm seeing that we have the from a completely objective, and when I'm not looking at usage statistics, I'm only looking at the properties of what it could become. Then I see tremendous potential in that you have a transaction system which isn't based on channels, where you don't need to be online. Anybody can receive a payment. And you can implement zero-knowledge proof technologies, which anonymizes both the receiver and the sender and the amount. I mean, the properties that I'm talking about there, I think that's what's going to happen first. It's going to attract usage for stablecoins. And I have a long thesis about why I think that stablecoins will be the first thing that we will use a lot for medium of exchange transactions. And once you win that use case, then other cryptocurrencies are going to start to latch on to that transactional system. And I think that Ethereum is the network today that is making the most stablecoin transactions. Those stablecoin transactions are going to migrate to the layer 2 solution systems in Ethereum. And those technologies are going to get perfected because there's a lot of demand for making those types of transactions. And
but there isn't demand for payments in USDT right now. There isn't. There's demand for trading with USDT. There's demand for speculating with USDT. There isn't demand. That's the point. That's my point from the beginning of this discussion. There isn't demand, not for Bitcoin payments, but definitely not for stablecoin payments. It just doesn't exist right now. Now it might exist. I can't tell the future. I don't know. It might happen in the future.
Yeah,
but
on that, why do you think that stablecoins? I mean, why would you even conceive that stablecoins? I mean, it's $1 without a bank account, and it could be made almost completely perfectly private. Why wouldn't that in the future become a very attractive? Like, wouldn't you use it? Wouldn't you use if you had a bank balance? If you had a dollar account?
Well, I'll tell you why. Because I think first of all, it's not without a bank. There's an issuer that you trust, and I think that's a pretty important part of this.
Not without a bank account, you don't have to have the account.
No, it's true. You don't have to have an account for now. Maybe regulations change, but for now, you don't have to have an account.
There are stablecoin models which circumvent these problems. There are not perfect ones existing right now, but I think there's a big
Again, I don't know what the future holds. I can only talk about what I see, and I think that the reason that you're not seeing demand right now for stablecoin payments is because PayPal and Venmo are good enough. I think that's the reason why. Now you're going to say, well, some things you can't use Venmo for, and that's true. And I think that for them, they're going to be their own custodial services. So if you accept that USDT is a good medium of exchange, I don't know. I don't want to judge that myself. But if you believe that it is, then you can go ahead and deposit your USDT on Binance or whatever and use that to transact. And people do that. So, when you're going to have this second layer solution, it's going to have to compete with that. And you're going to have to convince people that they should install, I don't know, a node, a wallet. I don't know what they have to install, and that they should trust the Oracle, and that they should trust the compression system. And they should trust all of those things because why? Why is that better than just using Binance to send stablecoins around? And I believe that most people are not going to care that much. Some people will, especially a lot of the loudmouths on Twitter might. I think most people are not, especially when you see that the stablecoin is already trust based. It's not like if you're using it without Binance, then the trust disappears. It's already trust based. So I think that most people are going to be okay with trusting some trusted party to facilitate those payments. They already do. Most people don't. I don't want to say most. A ton of people do not ever let their stable coins touch their self-custody wallets because there really isn't much of a point. They move them between exchanges. Some people seem to like having them on their own wallets, on their ledger or their phone or whatever it is, but a lot of people don't. So
Oh, okay. I'm fine with saying let's keep Eric's Ethereum roll up TBTC. Let's let that remain be my pet theory, if you will. I'm okay with us not seriously entertaining that idea. But if we go back then, because this whole stablecoin discussion is just another pet theory of mine, that is how I think that a payment system will end up gaining popularity. So it's not really to the core of the point. If we go back to the core of the point, because I really want to reach some kind of conclusion here, which is if it's not on a side chain, and how do you think that we are going to be if we reach a point of Bitcoin a point of Bitcoin hyper Bitcoinization? How do you think that the majority of transactions are going to be conducted? Do you think it's going to be custodial systems? Is that how we're going to make Bitcoin transactions?
I think the most likely option
Or is it
is
Lightning?
what's that? Sorry.
Is it Lightning or custodial?
No, I think it's going to be custodial. I think the most likely option is, what Hal Finney predicted back in 2010 or whenever it was, that people would just use Bitcoin banks for payments. I think that's the most likely option that most people will use. I'm not sold on it for 100%. I think it's the most likely option. I think that's assuming that people are going to want to spend their Bitcoins at all, I think that's the way they're going to want to do it, the mainstream at least. Lightning can still coexist in this. So, you can have those networks interoperate if you want. A custodial service can implement some of the Lightning technologies. It can implement the invoicing protocol, for example, and it can implement LNURL. It can implement even the way the channels work just custodially. It can be like this mix, right? And then you could choose. Some people could choose to use Lightning in a self custody manner. So I think that's something that is likely. Again, if people even want to pay with Bitcoin, you want to spend Bitcoin at all, which is not something I'm entirely sure they will. But if they do, then I think that's a possible scenario, the most likely one, I would say. I think also Lightning is pretty, it could happen. I'm just not sure that people, want this hard enough. But if they do, if there's demand, if people actually, like you think here, Eric, if people actually prefer self-custody solutions, then I think Lightning can get there. I really think it can. I think that, we're already seeing that the apps that exist today are really user-friendly. They're really great. They just work. You download them and they work. They're really good, and they're going to get better. So yeah, you're gonna have a service provider there. You're not gonna do it on your own. You'll need someone to manage channels for you probably, but it can be done in a self-custodial way. I think it's pretty good. I think it's a
Yeah.
pretty good way.
And we might also see this kind of in between model as well. We might call it the Uncle Jim model, right? So we might see like one person in the family who runs a Lightning bank, let's say, for the family, and they're
Right.
kind of all on board to that, right? And maybe, for example, even today, if they're running Blue Wallet and LND Hub, or if they're running, I think there's Coin OS as well, so they can like kind of run a Coin OS instance, and like the technical guy can like manage the channels underlying, and then everyone else in the family or close friends might just use that, and it's kind of custodial but with a semi-trusted, it's like a family member or a close friend. So that's also an option as well. It's as an in
Yeah, that's a
between.
very good point. I think kind of the property of Bitcoin being permissionless allows for all of those funky setups, and people are just going to form their own communities to do that. Some of them are going to be technical and offer that service to close friends or family or more than that, and some are not. But that's fine. That's how people choose to do their business.
Yeah, I mean, I think I kind of agree. I mean, before we had this conversation, I was sitting last night on my balcony, and I have personally most of my net worth in Bitcoin, and then I have my regular salary, which is Norwegian kroner on a bank account. And like, how do I feel about that? I'm as long as I can have the majority of my funds, like the store value portion of my capital, stored non-custodially, then I'm happy. And if I can use my salary and everyday spendings, I suppose that's an acceptable way, and I think that is indeed how most people are going to choose to do this. But I do think, like, if my conclusion is that most people are going to be using Bitcoin custodially, then I think wanting to experiment with Bitcoin on a side chain where you have better privacy, that I think that's definitely. I mean, if the option is to do it custodially or a funky Lightning solution, I think that we shouldn't think that the people who want to try a different way are necessarily weird or absurd for thinking that there might be a third way that we can explore before we accept that these are the two only solutions.
Mm. Right. So I think one interesting point that might be good to discuss now is just what kind of data points would we look at? So let's say, a year from now or 5 years from now, what sort of data points would we externally look at to say, oh, okay, yeah, that was kind of the story there. So a couple of examples that I can think of. I know, Eric, you've done a bet based on total value locked. Another one we could look at, how many Lightning nodes are there? How many Lightning payments are there? How many stores use Lightning? What kinds of, what kind of external data points would you guys look at here?
That's a great question. It's funny because with Lightning you can always kind of almost move the goalposts in a way, because you can say, well, but maybe the channel is private and maybe we just wouldn't know about it. And with Taproot, it's going to be even harder to know about those channels. So it's in a way it's moving the goalposts. In another way, it's also true. Like, in theory, if it could exist like a huge Lightning network now that we're not aware of, probably not, but theoretically possible. So it's hard. I think that when you're going to look at things like total value locked, I think I know the bet that you're referring to that Eric made, I think with Giacomo, if I remember correctly.
It's
So
Giacomo and Brian Gantry, yeah.
yeah, so the thing is, I think I don't remember what the bet was, but if the idea is to compare the size of value locked on second layer solutions on Ethereum to money locked on Lightning, that's not a good comparison, because there's probably going to be more money on Ethereum simply because this is the Ethereum stuff is used for speculation, while the Lightning stuff is being used for payments, and the demand for payments is just much lower. If you're going to look at payments on second layer solutions on Ethereum, I'm not sure how to measure that, but I believe it's going to be roughly zero for the next 5 years at least. I don't think people are interested in making payments on on Ethereum, in Bitcoin payments on Ethereum. I don't think that's something that anyone has any interest in right now. I don't know how to measure that, but I can imagine that there's going to be some meaningful usage of Bitcoin on Ethereum second layers, but it's not going to be for payments.
Yeah, I think we just fundamentally disagree there. I think that a private dollar that is, I mean, I just think that it's a really really big use case, and I think that I personally would want a wallet that I have where I can transfer my dollars privately, and there's no one that can see which transactions I'm making. I think that with the whole way that the internet is going, that everybody starts to care more about their integrity. I think that people will start to prefer those types of solutions. But I mean, that's will be it's just something that we're going to have to see develop. I think. Regarding which data points to measure, I also think that that's very hard. I think that the bet that I made with Giacomo and Ryan is probably the best one that you can do. But I also kind of agree with Udi that it was a bad bet for them to make, because there are so many other reasons to put in Ethereum funds in a layer 2 than there are to do it for Bitcoin. So I think they're going to lose that bet, and it's not going to be a super good metric. But I think, like in general, I'm not sure that we need so many metrics to understand where this place is headed. I mean, we know, like just interact with your fellow Bitcoiners, you're going to know that Lightning usage is pretty low right now, or extremely low even, you could say. I think that we're going to know a few years from now if it's picking up, if it's becoming a big thing that people are using. If you're using it with your friends, then you can bet some other people are also using it with their friends. So I don't know. We'll just have to wait and see, I think.
Yeah, my speculation would just be that, look, most people are hodling Bitcoin, but there will be some small percentage of the Bitcoiner population out there who are either all in Bitcoin or they only earn Bitcoin, so they need to spend. And then given that they need to spend, they probably would look at using Lightning. But even as a driver there, we probably need, we quote unquote, need the fee spikes to happen. And so that might happen. Let's say this next year or so, we see this kind of bull run happen. There's a lot of on-chain, usage. Maybe at that point, that's the driver for these people to start using a lot more Lightning transactions. That's kind of my speculation. But I think also, just to add to kind of the point we were talking about with like how many people are going to be on these stable coins and so on, like it just comes down to we're all fundamentally bullish on Bitcoin. And so we see the world is, repricing into sats, whether that's over the next 10 or 20 years, people are going to want to hold Bitcoin. And so then as we see that network grow, only then will we see more people who actually want to spend it. Because as Udi has pointed out, and I think Eric, you probably agree, there's not a huge amount of people spending right now, but that will change, right?
Yeah, of course. That's when Bitcoin becomes universal hard money that we'll really start to see it. There being a demand for making transactions. And I think just to wrap up at least the points that I had in this conversation is that I do accept that most people will probably want to use at least the transactional port of their Bitcoin in a completely custodial system. And I think that if that's the case, then what we should perhaps focus on, where the real fight is going to be, is making sure that those custodians abide by proof of reserve, like that we can audit their funds, and we make sure that they are not inflating the Bitcoin supply by making more internal tokens than they actually have in their holdings. I think maybe that's an easier thing to. I mean, maybe that's
here
the fight. Yeah.
Mm-hmm.
So. Yeah, maybe that's a conclusion, that proof of reserves is what's going to matter.
Yeah, for sure. And Udi, do you have any kind of closing thoughts for the listeners? And also, actually, while we've got you here, maybe give us your thoughts on whether you've really left Bitcoin Twitter for good, or are you coming back?
Okay, to sum up my thoughts, I agree with Eric on everything because he's been on Bitcoin for 8 years, and I disagree with him on everything. So, and about Twitter, yeah, I left. It's over. it's over. If anyone wants to still follow my escapades, they can go to havefunstayingpoor.com and sign up, and they'll find me there. And that's it. I'm gone. No
But
more Twitter. Twitter is terrible.
You can also mention that your account is up for sale, as I understood it. How much? How much do you want for it?
Well, I'm not sure. I'm not sure I can sell it anymore because I think it's permanently deleted at this point. But if someone really is in the super fast, then I think that $70,000 is a good price.
Okay. All right. Can you also just give one explanation, because you tell me that it is my fault that you have deleted your Twitter. But I don't think
what was it? Yeah, you blocked me or something for a few seconds, and it broke my heart, and I deleted my account.
So now I can hear at least on your voice that you're being sarcastic, so I don't have to live with the guilt.
True. No, it's not really your fault.
And Eric, just for listeners who want to follow you online, where can they find you?
It's ERCWL on Twitter.
Well, look, thanks very much, guys. I think you guys both made some great points. Really interesting discussion. So thank you for joining me.
Thanks for having us.
Thanks.
Get the show notes at stefanlivera.com. See you in the Citadels.